Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're taking a look at three top-ranked tech stocks to consider buying now heading into Thanksgiving. In the three stocks we're looking at today are LegalZoom, Pinterest, and Vertiv. But before we get into everything, remember to subscribe and leave a review wherever you listen to your podcasts, and make sure to check out our Zacks.com/promo page for a look at some of our services, portfolios, and more. All right, so before we jump into these three stocks that I just mentioned, it's worth just doing a broader kind of market overview as we head into the final stretch of 2023 to give a sense of why we might be considering buying these three tech stocks and why investors might want to be back in the market after this downturn and then this recent rally. So the market essentially stalled out over the last 3 days. Last week at this point, I'm recording this Friday, but essentially now the last 3 days. So following the post-CPI release surge on Tuesday, in the relatively sideways moves then on Wednesday, Thursday, and Friday as I'm recording this, even though the market was edging a little bit higher in late afternoon trading on Friday, should likely be viewed as a positive for the bulls. It showcased that there's not even much appetite to sell and move to the sidelines even after this huge rally off those late October lows. It also shows that the bulls are in the driver's seat and now could remain there for the last relatively 6 weeks of the year, as both the S&P 500 and the NASDAQ trade solidly above those key 50-day and 200-day moving averages. And the recent slowdown actually prevented the market from getting a little bit too overheated heading into Thanksgiving, which is a good thing. So as long as interest rates remain off those highs and Wall Street is upping its bet now that the Fed is going to pause again, and more importantly, it's going to start cutting in the back half of 2024, we could see more positivity going forward. So lower interest rates simply change the calculus on stocks and will force more investors to get back into the market. And even if an above average amount of money does remain in money market accounts, which it probably should be at current levels, considering there was that decade plus of minimal risk-free returns, more investors will likely get off the sidelines now that Wall Street's convinced that the Fed is done hiking and will actually be lowering rates. And now the next move for both the NASDAQ and the S&P 500 will be to pass those summer highs from late July and early August. And then the next road that a lot of technical traders are looking at is possibly heading back up to those all-time highs at some point in early or late 2023 or early 2024. Those will obviously be more difficult to get to those levels, but the signs that the bulls are back in control are there. And even if the U.S. does fall into a recession, which it most likely will at some point, the recessions are just part of economic cycles, Wall Street cares more about the fact that interest rates are going to be lower and the aggregate earnings outlook, which is still calling for expansion in 2024 and 2025, which is certainly being driven by tech as well, which is what is driving the market comeback. So with this in mind, we're going to dive into these three tech-focused Zacks ranked number one strong buy stocks to consider buying heading into Thanksgiving. And the first stock up is LegalZoom, which trades in the ticker LZ. It's an online platform for business-focused information. The company's overall mission statement revolves around the idea that everyone should, quote, have affordable access to legal and financial expertise. The company helps deliver a wide-ranging array of legal, tax, and compliance products and know-how and expertise for small business owners through online-based technology and software. The company offers a range of offerings and solutions for a variety of things. For instance, the company boasts that it lets people essentially get their business off the ground. So they have ways to start LLCs, corporations, nonprofits, various things like that. They help with wills and trusts and things such as divorce or real estate planning. And then they also have, just various new things as well. So more recently, they're rolling out LZ Books, which is an accounting solution for small businesses. And they also are rolling out an AI-focused document summarization tool called Doc Assist that could be part of a growing world where everyone is trying to democratize the world of legal documents and all of this and just their business has struggled overall, or at least the stock has struggled overall since it went public. But the company operates in an area of the tech space that could kind of continue to grow years and years to come, even if LegalZoom doesn't grow at maybe 20, 30% that people would consider for some of these, quote, growth-focused businesses, that it's going to be in a side of the market that only has legs to the upside as everything moves online and people try to get their advice for as cheaply as possible and not have to pay sometimes exorbitant fees from big law firms and things like that for things that going forward will maybe be, as I said, more democratized by places like LegalZoom. So the company topped our Q3 estimates on November 7th, and it boosted its guidance. So its outlook for earnings is trending heavily in the right direction, and its most accurate / most recent estimates are coming in solidly above the current consensus, with 2024's estimates actually 11% higher than consensus at the moment. So trending heavily in the right direction. As I mentioned, with all these stocks, it is a Zacks ranked #1 strong buy at the moment. And overall, the company is expected to post about 6% revenue growth this year and then another 9% revenue growth next year. And on the bottom line, we're calling for 131% growth this year to get up to 37 cents per share, and then about 26% growth on top of that next year. So in terms of the stock price, the stock's up about 45% in 2023 versus the market's roughly 19% climb. This includes a big drop actually since early August after it missed estimates at the time. But as I just said, it recently topped estimates. So on top of that, LegalZoom is actually down about 70% from their all-time highs. The stock did go public in the summer of 2021, which was near the time tech stocks in the market were starting to edge towards their peak. So it went public at an inopportune time, to say the least. But the stock is back above its 50-day and 200-day moving averages. And in terms of valuation levels, some of those valuation levels are looking relatively enticing. So it's trading at about 2.9 times forward 12-month sales, which actually marks a solid discount to the broader S&P 500, which is trading about 3.7 times forward 12-month sales. And then if you look at its PEG ratio, it's trading at 0.9 versus the S&P 500's 1.8. So if you look at that, factors in its longer term earnings growth outlook, that valuation's looking nice as well. And it's trading 28% below the average Zacks price target. And overall, Wall Street's pretty high in the stock. So of the 9 brokerage recommendations that we have, 6 are sitting at strong buys with only 1 sell in there. So LegalZoom certainly a stock to consider at the moment. It's also a low price stock as well, trading under $20 per share, solidly under $20 per share. So that also might be an attractive aspect of LegalZoom, along with all of its other fundamentals for investors heading into Thanksgiving and the end of 2023. And next up is Pinterest, which trades on the ticker PINS, so PINS. It was a big time pandemic winner, along with other digital ad focused stocks, I should say, such as Snap, the parent of Snapchat, soaring at one point from $15 per share all the way up to $85 in early 2021. The company did then tumble from its peaks alongside many other growth stocks, but it's making a comeback, and it topped our quarterly earnings and revenue estimates on October 30th, and it's providing really upbeat guidance. So let's quickly look at the company before we dive into some more of the recent results and outlook and some other fundamentals. So the company became a hit with advertisers, small businesses, and entrepreneurs and others because paid content and ads kind of fit seamlessly into the Pinterest platform. The company's roughly 480 million global monthly users come to Pinterest to find and share ideas and inspiration for everything from clothing to date night ideas to vacation to home remodeling to workouts and much more. So the company, as I said, it kind of fits that people are coming to find inspiration. So if you're a travel destination or a hotel, you could kind of fit right into there. Or if you sell workout equipment or workout gear, you kind of fit into their broader platform. The company spent the last several years boosting its ad tech and video features and cutting costs in other efforts to help transform the firm longer term after that breakneck growth is over at this point. It just grew too much, too fast, and now it's just going to be a more stable company going forward. The company also is investing heavily in far more features focused on e-commerce to expand its reach beyond ads and drive longer-term engagement from users and brands and other businesses. So overall, the company operates in a pretty unique space in the wider, quote, social media world, which is nice for Wall Street to not. It doesn't have many direct competitors. So overall in Q3, which was that recently reported quarter, its revenue grew about 11% year over year, and its adjusted earnings soared about 150%, and its global monthly active users increased about 8% for the second quarter in a row to 482 million. This came in solidly above the Zacks estimate, which was at 472, so beat by 10 million users. And its monthly active users internationally climbed as well, and it came in well above the estimate we had. So it reached 258 million monthly active users internationally, so outside of the US. And its earnings revisions are trending heavily in the right direction. So it's up about 10% for FY 2023, so the current year, and then up nearly 13% for 2024. And with this recent resurgence in its earnings revisions, it's actually trending heavily back up towards where the revisions were at in the early part of 2022. So definitely going right back in the right direction for its bottom line outlook. Overall, we're calling for about 9% revenue growth this year, and then another 17% growth next year to get all the way up to about 3.6 billion. And then on the bottom line, we're calling for 70% growth in 2023 and another 20% growth in 2024. So really solid top and bottom line growth we're calling for Pinterest. And like with all these stocks, I said it's a Zacks ranked number one strong buy based on those positive earnings revisions. And in terms of its price performance, the stock has soared. It soared after its big beat and raise quarter at the end of last month, and it's now up about 20% now in the past 3 months and 30% year to date. And this does actually include some big up and down swings. And like with LegalZoom, it's still trading way below its all-time high. So it's trading about 60% below its all-time highs and 12% beneath its average Zacks price target. And the stock, though, is back above its 200-day and 50-day moving averages. And Wall Street's pretty high on the stock, so 17 of the 25 brokerage recommendations we have are coming in at strong buys. On the valuation front, some people might be a little nervous about where it's trading. It's still trading at 6 times forward sales, which is above the Zacks tech sector. So that's a little expensive. But then if we look at its PEG ratio, it factors in that, as I said, that longer term earnings growth outlook. It's now down to 3.9, which is still way above the tech sector at about 1.9, but it's way below its highs over the last just year. So that's good to see. Actually, not even over the last year, just over the last 6 months, it's traded as high as 11. So that shows that its earnings outlook is trending heavily in the right direction, which is slowly going to have its valuation look more and more respectable. So Pinterest also has a really stellar balance sheet, and it operates in a potentially potent long-term niche within the digital content world and advertising space. So certainly worth considering Pinterest as it trades still way below its all-time highs and finds a little bit of a footing here as we make a broader market comeback. And the last up is Vertiv Holdings, which trades in the ticker VRT. Vertiv is a digital infrastructure and continuity solutions provider that's crushed our bottom line estimates and boosted its guidance during the first 3 quarters of 2023. It also had a big beat and raise Q3 at the end of October, and the stock has skyrocketed to near new highs over the last 12 months. Or I should say it has hit new highs, but it's not trading there right at the moment. Actually, its big run has it topping Meta over this stretch and nearly matching NVIDIA. Yet it still trades at a discount to the wider Zacks tech sector and its own highs in terms of valuation. And Wall Street also loves the fact that it's seemingly benefiting from the broader AI investment cycle as companies kind of race across the board to increase their computing capacity to be able to roll out these AI focused offerings. So let's go into a little bit of what the company does and then jump into more of the other fundamentals. So Vertiv's various products, services, and solutions are designed to help keep its customers, quote, vital applications running continuously and performing optimally and growing their business and growing along with their business needs. So the Ohio-based firm's portfolio of power, cooling, and IT infrastructure solutions and services operates across data centers, communication networks, commercial and industrial facilities, and beyond. So simply put, if investors really want to think about data centers and these communication networks, other critical technology is like really complex systems that you don't need to know everything about. Their role, Veritiv's role, is to be kind of behind the scenes in keeping that tech running smoothly and properly. So they're a behind the scenes operator. We don't need to get too technically involved into what their business is. So they went public via a SPAC in early 2020, posting 14% revenue growth during their first 2 full years as a public firm. Then it grew its Q3 2023 revenue by 18%, and it closed the period with a record backlog of $5 billion. And its adjusted operating margins climbed from 9% in the year-ago period all the way up to 17%, driven by benefits from pricing, volume, and productivity. So that was really great to see in terms of its margins, and it also posted impressive beat raise. As I said, this was on October 25th, boosting its guidance for all of its key financial metrics going forward, as it sees really healthy growth and momentum continuing. Wall Street's also gravitating to all things AI, and the company is poised to benefit from that growing investment. So the CEO said in prepared remarks last quarter, so in Q3, that, quote, "We are still in the early stages, but the industry is gearing up to deploy data center infrastructure needed to meet the compute capacity that AI is demanding, and Vertiv is really benefiting from that." So Zacks estimates are calling for their revenue to jump 20% this year and another 9% higher next year to get up to $7.5 billion. And its adjusted earnings are set to soar 225% this year and then another 29% next year, to go from about 53 cents per share last year to $2.20 per share next year. And its overall earnings outlook for this year, next year, and 2025 at this point are trending heavily in the right direction, or super high over the last year and recently, to help it land a Zacks ranked number 1 strong buy right now. So overall, its 2023 consensus is up 70% over the last 12 months, and its 2024 outlook is up 80% during that stretch. So really big bottom line improvements. Overall, the stock is up about 205% during the past 12 months. This beats Meta and nearly matches NVIDIA, as I mentioned, and it's climbed by about 130% over the last 3 years. Overall, the stock touched new all-time highs on November 15th, and it's still trading below its average Zacks price target, and it's currently trading solidly above its 50-day moving average. And on a positive side, it's actually fallen from way above overbought RSI levels to closer to neutral during the last several months as well. And despite this outperformance, the stock is trading at a 36% discount to its industry and roughly 15% below the Zacks tech sector at 20.4 times forward 12-month earnings, which is also 18% value to its own highs. This is despite it going on this big run to all-time highs in terms of its price. The company operates overall in a somewhat unglamorous behind-the-scenes area of tech, but it's still vital and it's of constant importance. And Wall Street's really high on the stock, with 9 of the 10 brokerage recommendations that we have for Vertiv coming in at strong buy. So overall, certainly another stock worth considering in the tech world as we head into Thanksgiving and hopefully a really bullish end to 2023. So that does it for this episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute, an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.